All right, good morning, everyone. This is Rose. Today is October 17, Monday, 3 minutes after 9 a.m. Can you guys give me 2 seconds, please? All right, global session is extending. Let's see. All right, let's see. Still going up. All right, let's take a look what's happening here. So this month is at the moment, a doji, and we're still resting on the moving average, but on the weekly, we have been, this is June low right here. We had a breakout from the June low with 3 weeks ago, and then we reversed back pretty strong, and but it didn't last too long. So the following week we ended up opening, which was last week, we ended up opening in a trading range, but we had another breakout. But this breakout last week was, weak, but we still tested, we're still below the June low. Now, what we did with last week, we tested this high, which is important because we still haven't moved under it. Now, if we do, this area seems like a balance zone, and you can see that we have actually spent some time there in an equal low. I mean, if we do start to sell, we can even breach and come all the way down to these equal lows. Now, we're not there, we're far from it, and the breakout last week was weak, and we did not stay below this moving average. So we're still above it, and now two things can happen. We have a tied bear channel here, and bears want to get another leg down, especially with this sell. Okay, so leg 1, 2, 3 bear days, and then we pulled back, and now could this be or was this a start of a second leg, and are we gonna keep coming down? Okay, so that's one thing, and we could. But today, even though we're gonna gap up, if we get rejection from the highs, we can start to swing down, and that could continue on its way below this moving average down into this area. Now, bears want to continue this and get another leg down, perhaps a third leg down, okay, before going back up. Now, bulls, on the other hand, they actually see a wedge and nested wedges, right? So what they see here is 1, pull back, 2, pull back, maybe a 3 wedge, and then they might be seeing 1, 2, 3 right there. Okay, so we have nested wedges, and now we have a inside week. Okay, so we started as an inside, but we're bullish. So is this it then? Are we reversing? If we do reverse, this is where bulls want to go back and test, and eventually they want to get back up here. But they got a lot of work to do here. Not only they have to go test this high, okay, stay above that low, okay, which is June low. We're still below June low. And if we start to close, or, well, this is really weekly, you're not going to see a close until the end of the week. But if we continue to go up, if this week is going to become some kind of bullish, okay, which is, I think, is difficult because this is a tight bear channel, most likely we will come back down. We need some kind of a higher low, okay? So we're not going to do this, obviously, this week, but I'm going to go back and look at the daily bars. Now, this week could go up, and then it could go up, it could come down. So that would make this week sideways bars, bunch of days sideways, okay? but we could end up staying in this week's range as well. So it's very unclear. All I know, all I see here is that, is this, looking like some kind of exhaustion? Are we going to reverse? If we reverse, where can we go? So these are my boundaries, basically. Bulls want to keep going up, but I think this is very difficult. We're already sideways. We might end up in sideways. So that if we stay, even if we go up and come down, that will reflect onto the daily chart as sideways. So here we are. You can already see 1, 2, 3, last 3 days, kind of in a trading range, but really stuck here. And here 1, 2, 3, or I could say 1, 2, and 3 now. That's the wedge. Okay. So what does this mean? I mean, we are above September's low, but really barely. Bears want to close bear bars, come down and test this, maybe have another move down and have another wedge completion, okay? If this isn't good enough for them, down, up, down, up, down. So you would have wedge right here, you would have wedge. Now bulls want to take that, and this is good enough for them, perhaps a lower low trend reversal. But again, we need to get above this high with bull day closes, and we need to start challenging this midpoint in order to get some kind of a measured move to the upside. Now bears want to eliminate that, and they want to actually come down maybe another leg and test these lows. And this is generally a reversal pattern, okay? So we end up actually reversing like that. This could be it. So are we going to have another leg down? That is possible. We could have that leg down. So if that's the case, I'm also going to keep my eyes on, will there be some kind of a measured move down here? So we'll see how this goes, but I think we're going to end up in some kind of sideways price action this week. And we're also in a expanding triangle. It's a bigger, expanding triangles are trading ranges. They're just directional. And, but we do have, violent moves up and down once we have 3 tests on one side. We have not tested this side for the 3rd time. Now, also we have a trading range here now. So what does this mean? Like I said, either you're looking at it from the weekly chart perspective or the daily, we are now in this trading range. So we could maybe come down. I would say, I think we're going to go back up. We're going to come down, and then we could end up going back up and breaking out above it, and then perhaps go back if the bears fail to break this, okay? Or if they do break after we go up, perhaps maybe come down, okay? And if we do break this, okay, then I'm going to look for a measured move down. But right now, I'm seeing some kind of a trading range developing here. You can also go back to brookstradingcourse.com/analysis, and you can actually either you can go there or go to brookstradingcourse.com and the blog within the navigation, top navigation, click on the blog and read the weekly analysis that are generally sent out via email subscription on the weekends. You can get a lot more bird's eye view and in detail what the market could do this week, okay? So with that in mind, I'm going to now go to the hourly chart. So I have my week set up. So Monday, Tuesday, Wednesday, Thursday, Friday from October 10th to October 14th. So I have my week high right there, okay? Last week's high, and I have last week's mid, and then last week's low. So we are smack in the middle. We have big up, kind of a down, a big down, but not all the way. So we do have spike, pullback, and a channel down, okay? So here's your channel, also wedge. Now, if we do break out, we could continue down, but there is a gap here, okay, strong gap here. So there are probably buyers here, and it might send us back to this hour's high, and we could end up coming back down from there. So I'm going to be watching the open right now. Where are we right now? Okay, so we're going to definitely gap up at the open, okay? So we're going to be up here, right there. We're going to open up a little bit above it, actually. So basically, we're testing that. I said we're going to get up there, but remember, this is RTH, so it's really not showing the overnight hourly bars. So we're going to open up right here. We're already testing that spike, pullback, and channel. So at the open, if we do get some kind of a rejection, we might briefly come in, but this is the area that the bulls are trying to go and eventually go to the high of last week. But we're now literally right here, 57, so just above, and we're testing that pullback bar's high, okay? Now, if we do come down a little bit and use that as support, this is where we're going to end up going, okay? So watch out, and we do have a expanding triangle, and bulls want to actually go test these levels, okay, maybe come down, but if we do break above it, we'll become very, very bullish. I don't know if that's going to be the case, but I see that where market is trying to go. Wants to go test this trend line and wants to break above it. So we'll see how it goes. Now, Globex session extended even more into the US Open. So Asia had a breakout, strong breakout with the London into EU session, and we are bullish. Okay, we have a couple of bull flags, and there was a measured move. Okay, so that's the target that the bulls are trying to reach. Okay, just about. Okay, so this is the area. There might be sellers waiting. We have a cup, and we might need a deep handle, but this entire thing could be a bear flag. Okay, so we have 1, 2, and 3 touch here, but this is ETH. Now this whole thing could be a bear flag, and we could get a deep pullback. Be careful here. So this low, that low from the London section, okay, could act as support. This cup is looking for a handle. So we could test this at the open, but we could also come down from it. Now on Friday, it was very interesting. Okay, so we had a continuation from Thursday's bull channel, but it was a brief continuation, and we could not stay above a high of yesterday. Now, high of yesterday, let's see, right, so which was right here, that red line. All right, so that was Thursday's high, and I warned you guys about, you know, not having consecutive bull bars above a certain prior highs would actually end up becoming a exhaustion, and you get these exhaustions on the high of yesterday or low of yesterday. And you can see right there, bar 3 was a strong bear bar, and they immediately started to sell. So you have a 2-bar reversal there. Now, first 2 bars, bar 1 and bar 2, overlapping bars with a fake breakout, and then immediately rejected with bar 3. Now, in order for me to sell this and expect at least an hour or so bear trend, I need to see 2 bear bars. So basically, I need this bar 3 to get continuation. Bar 4 ended up being the continuation bear bar, and among the 2 bars, one of them is very strong, bear close. So that's bar 3. You expect, more moves down, but the problem is that you're right at the EMA and you're right at this congestion. So I kept paying attention, and I said, if we do break here, and if we break a bear bar underneath the EMA and close some kind of a gap bar, bears are going to continue to sell this. And we had at that time a spike pullback and a bull channel, and I said, right down there, okay, is target. This is where the bears are trying to reach, and that's exactly what we did. So you could have either take that as your target, or you could have gotten your initial measured move target. Either or, we actually went to that target, okay? So, and then the bears started to take profit. Now we spent some time right at the magnet, 1 hour EMA, and we went sideways. You could see 10 bars, 2 legs, 2 EMA, but it really is this bear move is looking for some kind of a bear flag. So you can look for a rejection at the EMA or maybe a wedge. Okay, doesn't matter if this is lower, that is a wedge. And then you have a 2-bar reversal. All right, so what is that? That's bar 19 and 20. It's telling you this is a rejection and a bear flag at the EMA. So, and it's an inside bar, so you have a wedge and you have an inside bar. There will be sellers underneath bar 20 looking for a 5-point, 10-point scalp. And then the second entry bears are going to come in. Okay, so it's basically low 1, maybe low 2 at the EMA. Or you could say, hey, this is higher, so I'm going to take this as a low 1. Whatever it is, it's a bear flag. Okay, so it's coming down. Now you can sell this for being a wedge. Okay, and that will be your first entry. Because this wedge last push, we have some kind of a trading range there. You're going to have to assume you need to take profit before the low of that trading range. You have 1, 2, 3, 4 bars, okay, and we already breached below bar 18, so somewhere around here or maybe down here, buyers are waiting, and that happens to be the low of the trading range, so you may want to take profit before it tries to go back up to EMA and sells again. So it went up to EMA, that's exactly what they did, but at this point, this 3-bar leg is looking for a second leg down. Bears are not going to let this go. They're looking for a second entry short. So, bar 24 closed pretty strong. I don't like to sell a bar that closed that strong, but at this point, you can take a chance, okay? But if you do sell it, you're going to have to put your stop there, okay? If you sell under a bull bar like that, due to the strong move down, you're assuming a lower high, and you're wanting to sell, you're going to have to think of this. What if these guys, get a smaller complex leg up? If you put your stop here, you're out. They're going to get you out. But nonetheless, bar 25 actually ended up closing bearish. So that's your second entry short. There's still room to the down, the bottom of that trading range. So you sell this. You do need to scalp here a little bit and then leave a runner. Okay. So now you're looking for some kind of a measured move target. Okay, so if you sold right there, say, or you sold underneath bar 25, or you didn't sell anything, you're looking for whether or not this bear flag is actually going to hold and it's going to be a failed breakout. Okay, you just don't know if this is actually a measured move. You're waiting. And the breakout comes in with bar 28. It's got a lower wick. Buyers were waiting underneath that bar 16, maybe 2 points, 5 points, 10 points, whatever it is. They're buying, but they're not able to get a continuation bull closes to reverse this. So they're only making money a little bit above right here with, bar 31. There is no bull bar. So the bears want to keep pushing this down. Now you have a measured move target, okay, right there. Are we going to get this measured move target? We kind of failed, okay, here. And it's because we also have 1 up, 2 up, 3. So you have a wedge there. You also have nested wedge. Bulls do show up there. We do have continuation 32.33, but it's weak. It's basically bar 32 is a failed breakout for bears. Okay, so bulls come in. Bar 34 is a good bar. There will be probably buyers one tick above it. If you count this as your first entry, some machines will take that as a second entry. But because we made new lows and we have a breakout bar 32, to me, this is the first entry and then second entry. So I would not take this as a first entry. This is what I would take as first entry, 34 and buying above. Okay, so bulls get their second leg and they're trying to make 10 bars, 2 legs. Now, 10 bars can be 8 bars. So 1, 2, 3, 4, 5, 6, 7, 8. Okay, doesn't need to be 10 bars. It's flexible. All right, so it's a little bit flexible. But if it's less than 8, I still expect a little bit more move up. But they got the 8, so you got 2-bar reversal yet again at the EMA, and that's also a bear flag, right? It's also a wedge. 1, pull back, 2, pull back, and 3. So it's a wedge bear flag. So I'm looking to see if bears are going to actually break that trend line. They've broken that trend line with bar 41, but that's the 50% pullback of this 2-legged move. Bulls try again. Yep, we get a second entry short right there, and we're still keeping, okay, the always in short conditions down, and we're not that oversold, okay, because we have September low down here. It's a magnet, and bears are trying to get down to maybe to this measured move or to this magnet, so they're selling. You got another double top here, bear flag, and this time you're getting 1, 2, 3, 4, okay, bear bars. So this is going to try to get another leg down. So they have tried it. But the problem is, even though the leg down here, we're not able to close bear bars anymore. So we're not getting, okay, strong bear bars. Finally, sometime around, it's coming to 3 o'clock, okay, and so bulls might be actually starting to show some second entries, okay? But really all they can do is to go to the EMA. That's all they're doing. We keep getting rejected because the two EMAs are kind of a parallel to one another. So anytime when 20 EMA or 1 hour EMA, they're parallel, okay, especially if we're below the 1 hour EMA, okay, the market is going to sell anything they see bullish close like that. So I look for these 2-bar reversals all the time, and I sell them, and I expect at least a 5-point scalp. And if anything more than 5, I could be in a swing, but I'm not getting more, okay? So at the lows, we're getting rejected. We're not gapping down. We're not getting any measured move. This measured move is already almost done. So, and that's all we got. We've got another bear flag, and let's see. Sunday opened, that bear flag, we ended up buying. Market started to buy strong. We have a spike, we have a channel up, and then the breakout from that bull flag into the London session, right? We now have another flag, which is in the form of an expanding triangle. Bulls started to build above the apex, and they're buying. So expect another leg and possibly another flag. That would be the third flag, which we got, okay? So it could be a wedge, it could be a double bottom, whatever it is. We are breaking out, and now we're trying to get to the measured move target, and Globex high is now extended even more, so I'm going to adjust that as well. We are right at the measured move, so that's done. So if you actually bought it, when I showed you that measured move, I wanted to put it out there in case you wanted to trade it, because we are, I said, going into this area. And that area was actually drawn on Friday. I put that there, okay, Friday, and I said, watch, you know, we have equal highs, we're trapping the bulls, we're coming down, but that area is support, now turned into resistance. When we get up there, we're going to get rejected. I think we might end up coming down unless bulls actually break, okay? If we do break above it, and then we make the pullback, we could continue to go up. So today could be also a bull day. All right, so the market is up. Okay, Globex high. We just broke the Globex high, and we're trying to reach the new highs. But we are in a dangerous area here. Okay, be careful. They're trying to break above it. So there you go. So we have, I'm no longer interested in this. Okay, so we have, let's take a look at something here. So that is Friday, Thursday. This high right here is important. This is where the bulls want to reach. High of, I'm sorry, that's high of Friday. So the high that I'm looking for, let's see. It's right here. There's a gap there, so it's kind of important. Leave it there. Okay. Strong bull bar. That open of the week is, I think, hold on, let me check something. Yeah, it's last week's open, so we are testing last week's open. Okay, so this week's open and open of the day is right here, so that's going to update in a second. So we're right in the same level and we're above it, so we're bullish at the moment. Bulls are trying to get to that trend line, like I said, but it's dangerous here. Be careful. I'd like to see another bar, the second bar, strongly closing bullish. That would make a 2-bar, 2 bull bars, and we could get trend from the open. Right now we have a strong bull bar, and that's pretty exhaustive. I mean, look at that bar, and that, look at the Globex chart and look at your 15-minute bar. Look how strong that bar is. Okay, so bulls are trying to reach the 4-to-1. That's Asia 4-to-1 risk reward. They're trying to close this bar as high as possible to get continuation into here. Okay, that where we are right now is, let's see, that's 1, 2, 3. Actually, that is the 4-to-1. Sorry, we're already at 4-to-1. Yep, we already reached 4-to-1 risk reward for Asia breakout. Bar 2, another bull open. They're trying to fill that upper wick and continue to go up. So this is what I'm interested right there. We might actually keep pushing to that area at least. Let's see if they can continue this further more up. 2 bull bars could be trend from the open for bulls. So they're going to keep pushing to where I marked, bar 2 low, or it could actually literally go test the 36 as early as 36.92 area before coming down as 36.92 area before coming down. Market is trying to reach highs, 2 bars, but let's see how the bar 2 closes. They're trying to reach that level, 99.25, or as early as 92. We will pull back. So if you are long and you're trying to, push this further up maybe to high of yesterday, just be aware, somewhere closer to 36.92 area, they might start to take profit. They might even take profit as early as here. But 2 bull bars, if this bar 2 closes with a smaller wick, upper wick, we could still continue to go higher. Let's see what else. There were a lot of bears here on Friday. Look how much they sold. So this area is a problem. Okay. Even though we're trying to reach my hourly trend line, okay, on the hourly charts, and we could still continue to push the 3,700 area, but there are sellers waiting there, so just be careful. Now, what if we get a third bar and then we get some kind of a reversal there? Well, breakout on open, okay, you get 80% minor reversals and 50% major reversals, okay? So we're going to get that reversal. This is the third bar. It actually gapped up. Look at the way the bar 3 actually opened. It's a gap up, okay? So it's trying to push. But remember, we already gapped up. We're far, far away, okay, from the average price. We're also in some kind of a trading range. So this whole area is a trading range highs. So we will come down. And in fact, we could end up coming down after this third bar. So be careful. We're reaching my target. We actually reached the 92 and we're overshooting it because the ATR is 17, almost 18 points. So that overshoot could still get us to the bar 2 low. But market is bullish, so I don't see a bear bar yet. You cannot take profit if you do not see a bear bar, a bear close, a sign of profit taking. I don't see it. Bar 2 is a Marubozu. It has no upper wick. It has barely a lower wick, okay? Although I think there's a 1 tick upper wick now that I zoom in, but it looks like a Marubozu. So it's an impeccable, it's a beautiful close and a gap up. So you expect, okay, a continuation. Traders are buying the closes. So, and you have a gap between the low of 3 and a high of 1. So that presents, okay, a little bit more move to the upside. But once I start to see some kind of a bear bar, okay, we could end up getting profit taking because we're in the vicinity. So, all right, so breakout at the open, buy the close bars, strong, okay, and then we get a leg down, big up, big down, but we make a double bottom. They're already started to take profit, and then the whole day could be like that, or we could start to grind down. Look at this, up 3 bars, and then we start to get bear bars, right? So it's not like we started gap up and sell. We are bullish, so the bulls are going to try to reverse this, okay? It's either going to be a double bottom at the EMA, or we're going to get a double bottom, but it turns into a bear flag, second bear flag, third bear flag, but it's kind of settling, and then a breakout fails, and then towards around 230, I think we start to reverse again. So, but bulls still got a target up here, So they might end up continue to pushing this. What if it just pulls back a little bit and shows no interest of taking profit? 99.25 is still target, but that's just because it's low. Now the 50% of this bar to also target for bulls, okay, on the 5 minutes. So I'm going to measure that, okay. So, and I'm going to mark that area, and of course the high of is bar 2. So I have additional targets, 37.12. But I'm more interested in the bar 2 low. Some profit taking with the upper wick on bar 3, but still it's pretty strong. Depending on how it closes, it's important. Like I said, this whole area is profit taking. All right, so it's the upper wick is big and the body is small. It looks like a reversal bar, but it's a bull bar. Okay, so now some bears will start to take profit maybe a couple of points underneath, but really everybody is looking for a good bear close at the moment. Otherwise, this is not entirely selling. It could be just a pullback, okay? Now, bears want to see a strong bear close. If it continues to move this bar, some bulls are going to be scared and they're going to be taking profit quickly, and we could get another bear bar. But bar 3, unfortunately, is not that strong of a sell signal bar, but it's profit taking nonetheless, which I warned you guys about. Bulls want to try to get a high 1, and they're probably going to try to get back and test the highs again, or they're going to wait for high 2, or this is the low 1 from the highs, okay, because this is basically a double top, and the bear's trying to sell. So I don't think many bears will enter until they see the bar close on its really strong on its low and maybe gets a second bear bar. Strong 2 bars, follow through 3, profit taking with 3 doesn't make it suddenly a bear market, but you could see even on the 15-minute chart the profit taking began there. So can this reverse? Well, if they're going to reverse, they're going to have to close this bar on its low and then continue to sell with more bear bars all the way to the test of open or low of bar 1. Bulls want to continue to push this further up to 37.12, 37.14 area. So I don't want to sell anything here. I want to wait how this bar is going to close. If we do come down, we could test around bar 1 high. Buyers are still there waiting. But as long as this bar, is a weak bear or suddenly closes bullish, you know where we're going. So we're going to keep pushing this, and this is why I did not want to sell. I want to take a look at the ETA chart real quick, see what just happened. We broke that area, and now we're even more bullish. So I'm no longer interested in any of these. We're pushing. We have a cup, and this area, sellers were present, so that area is a breakout test possibly. We could keep pushing this. It's a bull trend from the open with a pause. Bar 4 closed bullish, so that's right there. High 1. Bears want some kind of a double top with bar 3 high, but probably not going to get it. If they do get it, then you look for some kind of a bear close, then yes. But there's a target here, so they're probably going to try to keep pushing. But watch out, they still want that double top with bar 3. It's just 4 bull bars at the moment, very difficult to sell. If the limit order bears want to sell this, they might be selling up here, hoping to get down here, then yes, then we would end up getting that double top. Looks like they are trying to use this area as a double top and pull back a little bit. But again, I don't see a bear body close. I cannot sell it, okay? So you can take profit if you haven't taken profit with bar 3 high or 4. However, if bar 5 suddenly starts to turn last second, becomes bullish, then we continue to go up. They're trying to close this bar as low as possible to get that double top with bar 6. Now, let's take a look at the calendar. We don't have any news scheduled. We had Empire State Manufacturing Index came out at 8:30, but I'm not sure. There's nothing else. Looks like they are accelerating the profit taking here, but bar hasn't closed bearish yet. There's still 1 minute. We'll still want to continue to push this further up. And failure to close this bar bearish or on its mid level, that's going to excite the bulls. They might be looking for a second entry long. We could end up going up to 37, 13, 14 area. High of yesterday is magnets. And even further more up to 37, 28 area, 28, 29 area. We could continue to push. Major gap to the EMA. But average price is far away. So if bulls think that this is too high, closer to the trading range highs, okay, look, think of this as a false breakout, an exhaustion. So think of this as trading range highs. So we're not have yet there. We didn't really reach the highs yet. So there's still a little bit of room. But if you take this as a trading range, maybe 1, 2, we're in the 3rd day, we could still come down. It's just that there is still room to the upside. If we do pull back, I'd assume we would pull back to 36.80 to find support there, or we're going to keep pushing further up. So bar 5 closed on its mid-level, so that makes it a double top and a qualifying bear bar to sell the close, and that's what they're doing. We're now coming down to the 36.80. Let's see if the bulls are going to show up there. Or the test of bar 1, breakout point, high of bar 1. I was long. I bought 1 tick above bar 1 with a small, very small position. And then I added more on the 2 close. And then I started to scalp with bar 3. Then I liked bar 4. I kept it, but as soon as bar 5 closed on its mid-level, I was done. I actually exited out of my long. because we could end up coming down here, okay? We might even, okay, this is where the average price is. So if you actually take out, so that's 6 bars, okay, take out about 14 bars from here, total of 20 bars, your average price, okay, is somewhere here. As a 20 EMA gets closer, we could end up coming all the way down here. I sure didn't want to give back all of that, and which I showed you guys an example earlier. What a big gap up and a couple of bull bars, you know, how can they reverse? So bears got a double top here and accelerated the profit taking with the bar 5 mid close. Now we're testing the 50% of this bull move up. We just tested the 3680. We moved 1 point below that. It's because they're trying to test the breakout point, which we did. Now, can the bulls buy the close of a bear bar right at the breakout point? Sure, they can, if they think that this is good enough pullback and low enough for them to enter once again. But it's too strong of a bear bar. I'm not going to buy the close blindly because it could still come down to the open of the day, open of the week, or the low of the day. We can't even make a new low of the day if bears want to reject this. So we're stalling right now at the 50% pullback from bar 1, 2, and 3. And we're looking for buyers here. Market is bullish. Two bear bars, is one of them closing strong, is it might continue to sell. All right, so some bulls are trying to buy that close of bar 6 at the breakout point and reverse it, okay, back to the highs. Now, if they can close this bar bullish, they might be able to succeed. But if they fail to close this bar bullish, we could break that 78.50 and continue to sell. But like I said, 36.80 was my come down and test and see if there are buyers here. There were buyers, but those machines will need to now see bar 7 close on its high and then continue to open bar 8 also bullish and keep going up. Bulls are looking for a high 2 set up to go higher. Bears want to last second close this bar as bearish as possible and break below the 36.78 and come down and test the low of bar 1. So watch the bars and how they close are very important. We could end up coming down to 36.67, maybe even 65 if bar 7 fails here as a bull bar. And it's failing. But we don't know yet, so there's still 3 minutes for this bar to close. You now have an inside bar. So you have down on this, up on this, down on this, okay? It's trying to go up. Could do a sideways and get another leg down. I just want to wait how it's going to close. It already went up. So the next bar could come down and make the 1, 2, 3 push wedge before going right back up. So bulls want to trap these bears trying to sell, okay? And bears want maybe a sideways bar or 2 and then have another leg down all the way to 36.67 area. And this is also that 3-bar limit order sell, okay, set up right here, right? The only problem is the bar 4 didn't have a wick. But 3rd bar closed bearish, right? So they're going to sell it. Either they're going to sell if it has a lower wick that is long, they're going to sell the close, stop goes here, or they're going to sell one tick underneath, expecting 2 legs down. So failure to get a second leg, even they're going to get the second leg, doesn't matter. But that second leg could be just a 1 bar, okay, with trapping, making a new low somewhere down here, and then trapping the bears, then that would end up becoming, that would end up becoming a 3-push wedge and a bull flag. So it could do this and then go right back up. And the bulls, what bulls want, they want to maintain the gap to the EMA, and they want to stay above 78.50 and keep going up higher, okay? So remember, we're in a cup and they're looking for a handle. So be careful selling here. I don't see a measured move of any kind unless you take this as your measured move, because there's a small structure there. So you would take this, perhaps. So you're expecting price to come down here, or perhaps come down here. So I did say that we might push down to 36.67 area, which is this measured move high, but this isn't a measured move. So right now, bulls are holding. They both the close of bar 6 at the breakout test area because they want to keep the market as bullish as possible. But I would like to see a second bull bar. But you also have to look at it from the bear's perspective, right? So what do you see here? Now we have a micro double bottom here in a way, but there's also up on this, down on this, up, down, up, okay? We need the final down so we could still push another leg. But bulls want the high too. And bar 7 is an inside bar and closed really high, okay? The only problem, the only thing that I'm hesitating here is that lack of a second bear leg. So if you buy here, where are you going to put your stop? You will put your stop here. If you do put your stop here, it could still come down, trap you, okay, before going back up. I want to see there's a limit order market here, okay? A bunch of bars are overlapping, including 4, 5, 6, 7. So that's why buying one tick above 7 is not really yielding much. So if you do put your stop underneath 2 ticks underneath 6, you're in trouble. You have to put your stop somewhere down here. And I warned you about that. Attempt to have another leg down because machines are counting as well. Now, if this fails, then I would say those who actually bought above 7, basically considering that as high too, and they want to keep going up and test the highs because I already see a micro double bottom wedge bull flag. But it's kind of iffy. So, and another reason to be bullish is I have targets here. We're trying to reach right up here. So maybe this is the second leg. So we're up, we were down, pull back, and a second leg, and a micro double bottom, high 2. Okay, we're trying to get back up to these highs. So let's see. So if you bought one tick above 86.75, you would get filled. Price needs to hit 88. So we not only hit 88, those bulls bought above 7 made a point, okay, and point and 2 ticks to spare. So now they're trying to make more. So the buyers that show up at 36.80, they just have to show us another bull body close as strong as 7 and continue to go higher to my targets, this and that, and possibly even 2 points above 37.12, so 37.14 area. Let's see if they can break out from the highs. Now, what can happen here if the bulls actually fail to break out from the highs? We could end up making a double top and then coming down to the EMA. That's a possibility too. But 3 bear bars at the open makes it very difficult for bears at the moment. Let's see if they can actually close this bar. Decent. Okay, so they failed to close it bullish, so that's not good. But those who bought above 6, thinking this is high too, they still scalped and they made money. They actually made a lot more. So 88 was their first, so 89 was the second point. So they made 90, doesn't count, that's actually 89.75. So they made a lot more than 2 points of a scalp, which is good for the bulls. But they could not close bar 8 bullish enough. So that's a problem. But they're still on. They're stopped now, possibly underneath 6. If this bar closes up here, they're probably going to become break even. Bears want some kind of a double top, but I think this is very difficult now for bears. We're going to keep pushing this further up to here, 37.09, 09.25 area, like I marked. I'm sorry, not 09, what am I saying? 99.25. On the 09, let's say 37.10. So 37.10 or 12 is overshoot. We could still get there. 36.99.25 is my target. $98.75, sorry. Because ATR is so big, you kind of have to zoom in to make sure you're positioning your price levels right. It just squished a lot. So 98.75. There might be some profit taken at the low of bar 2, but I think we're going to keep pushing towards up here, 37.09, 37.10 area or 12 area. Possible overshoot to 14. If we do close this bar bullish, okay, we do have a negative gap here. So the bulls, and then we have the EMA gap. Bulls want to close a bull bar above bar 3 high. So then all of these stops are going to move here to bar 6, and they're still swinging this now, okay? So I like to see bulls close this bar 1 tick above bar 3. 98.75 is target. Sorry, I thought it was 99.25, but I wasn't really drawing right at the bottom of the bar 2, so I had to correct that. Now, bears want a double top here and a failure, but I think they missed their chance. So I like to see continuation. Now, where can the early bears show up? And I'll tell you right now, like I said, that 98.75, 99 area, maybe 3,700. Okay, you might want to pay yourself, which I'm going to do. I just paid myself here a little bit, just in case. Could go up a little bit more before coming down a little bit. It could be 3,700. They're trying to test. Good job, bulls. Could this go all day long, on and on and on and on? Well, we know where it's going. You just have to buy and scalp and pay yourself along the way. This area is strong resistance. Last week's high is resistance. So what I do is, look, everybody talks about probabilities. You have to always look at the probabilities, right? So we opened, gapped up. We have strong 2 bull bars, and I said we're bullish. So the bulls are buying the pullbacks and they're maintaining the gaps open. Look at the bar 1 high and the bar 6 low. And I kept saying that as long as we do not close a bar below this breakout point, there's a gap there. As long as that gap is maintained, this is the target, the prior high. And we also have a huge gap here. So the bulls probability is higher for them to keep pushing higher. But just because you buy, you don't assume the market is going to make a 50 points, 100 points, or 40 points, or 80 points. What you do is you buy, you scalp, you leave a runner, and then you get strong bull closes, you add more, and then you scalp again as it goes another 5, 10 points. And then you leave a runner until your runner no longer runs and it's not making money, then you can exit out. You hold it until then. But it's just that I have targets and they keep pushing, so there's no need to sell. You can buy with a limit order, you can buy with pullbacks, you can buy above bars with stop orders. So the pullback buyers were, like I said, somewhere around 36.80. They breached a little bit below, but around that area, they bought it anyway. Okay? I can't really sell here. It's strong. Breakout bar, it's just breakout pullback. Now, can this breakout fail and be a false breakout or failed breakout? If the bar 10 closes bearish, right now we have a breakout, we have a pullback. If bulls do close bar 10 bullish, okay, that's continuation. That would be breakout and continuation, follow through. We would continue to go higher. Now my target becomes 37.12 and 37.14 for bulls. So now what bulls want, they want to maintain now this breakout point gap, okay, just like they maintained here. Even we get a wick, but if the body of a bear bar is not overlapping with the high of bar 3, that means we have an open gap, right? So the reason why bar 10 is stalling here, because of that reason. So bulls are trying to maintain that. They're trying to keep that bar 10 body as high as possible. Even if it comes right now, comes down, there's still more than 1 minute. At the end of the 1 minute, they can push that body up, and all you're getting is probably a overlapping wicks. That's still a gap open. That means that bulls are going to keep pushing this higher. If I see that gap close and suddenly we get bar 10 strongly a bear close, then I have to think about, is this exhaustion and failed breakout? Yeah. But I think they're trying to, this is the second push. They're going to try to get the third push to get a wedge top. Same. Oil is in a trading range, and it's trying to make a double top midpoint test. They could come down, test, and start to make new lows. That means you have head and shoulders pattern with a neckline. Bears need to break this neckline if they want to sell. That's the neckline. But as long as they keep above it, watch this high. Okay, if they do start to close bull bars, they're going to keep breaking out and going higher. Okay, so watch that high. If they cannot get above it and suddenly they get a bear bar, that's a head and shoulders, you want to see this broken, and then you would look for some kind of a measured move down. Anyone? Okay, so let me ask you, Steve, What's the, okay, guys, wow, I love it. There are 3 people trade oil. So who's going to tell me then among these 3 or 4 people, what's the average tick size that oil trades? What do you expect from oil to move up and down? Let's see who's going to answer it correctly. I don't know what that means. I'm talking tick. I'll just give you guys 5 more seconds to type. Actually, Momi is right. Thank you, Momi. So it's actually 8 to 10. That's your average. Okay. That's what I expect for price to move. It's actually, trading oil is very lucrative, actually. I kind of miss it. And you get the, you get really good, you get actually very good patterns and clean moves. So they're now testing this. It's also 1, 2, 3 touch. They're trying to break that neckline. And if they do break that neckline, this area, we could come down and test, okay, very quickly. I have yet to trade a micro oil. I think my broker, allows that, but I've never traded the micro. Okay, so what's happening here? Unfortunately, bears are trying to close this, but again, like I said, this is the second push up, okay? So it's expected to come down. But that's bad for the bulls. They should not have allowed this much. Now, what if we go up and in about 40 seconds we get a huge wick, okay, and the body closes up here? Well, they're going to have to they're going to hurry up and do that now if they want to keep that gap open. But I think they're going to fail here. And bulls are going to fail, and I don't think they're going to be able to push that bear body that high above bar 3 to keep that gap open. So it's becoming not so bullish, as you can see, but still we have a decent, very strong gap actually to the EMA open, okay? So is this the double top at the end of the first hour? Okay, the hour will end in 5 minutes. Are we getting a double top here and like a diagonal double top, and then we're going to end up coming down and testing this midpoint and then ending up somewhere here, but still be able to keep the gap open and keep going up and up and up? It's possible. But right now, bar 11 is overlapping body, so there is no negative gap anymore. So this isn't that strong of a bull trend anymore. Now, what can happen here? Well, the bears are trying to come down and test the bar 9 low, and they're trying to break out from there a little bit more down, come back down and test the bar, not bar, but 3681, 3680 area. Bears are trying to come down and test the bar 9 low, and they're trying to break out from there a little bit more down, come back down and test the bar, not bar, but 3681, 3680 area. So the goal is to test the low of bar 9 for bears. I didn't like the way the bar 11 closed. I was up with 1 micro contract, and I didn't like the way the bar 10 closed, and then I didn't like the bar 11 close, so I exited out. And so that runner really didn't make any money at all. But I'm now watching, are they going to be able to close this bar, the third bear bar, and continue to come down and test the low of bar 9? So basically, we have an outside down bar 11. And basically, I take bar 11 as a breakout bar, okay? because it's an outside down bar, it's a breakout bar. So what it's really doing is telling you that these bulls failed to break out. So these bears are going to now play into it, and they're going to get continuation. So if the bears actually close bar 12 on its low like that, that would become a follow-through. That follow-through could give us another leg down, okay, to the low of bar 9. Now, I don't have 2 bull bars. That means there may not be any limit order buyers waiting. But because it's a big bull bar, they probably are waiting there. Doesn't matter. It's a big bull bar still, and it was able to break out. So I know that there are some kind of buyers waiting here, but that's what the bears want to test, the low of bar 9. All right, so let's take a look what might be happening here. An example, bull trend from the open, and then it might be maybe giving us a trading range possibly. So we do have a bull trend from the open, and then we're going sideways. They got a 2-leg down. They had a much visible 2-bar reversal here, okay? I don't think we're going to have this. Don't think this is going to be us. I think bulls are going to maintain that gap. As long as that gap is open, I'm still bullish. Okay? Even if we do come down all the way, maybe like a couple of points below the bar 9, okay, or maybe testing, say, bar 7 open area, okay? Buyers are waiting there. So I'm still bullish. I will look to buy there, at least for a bounce. But right now, I am flat. I didn't sell this. I want to see what the bears are going to do here. I want to buy again. What the bears are going to do here. I want to buy again. Okay, 3 bear bars. All 3 are closing on their mid or low, so this is probably going to try to come down another leg. So I think it is, they're really trying to test the bar 9 low, but let's see. We need a sideways and then down. So we have a quick pullback. Now, the problem with bar 13, I can't really see, so I have to zoom in. Is it a micro double bottom? Nope, it went below bar 12, so that means we're coming down here. There you go. Now I like to see if they can actually test that bar 9 low. Would be nice if we can actually test 3681. Let's see if they can do it, or I mean, I don't want to buy just yet. I'd like to see a little bit more down to maybe 81 area, or maybe even test of, yeah, just about 81, 80 area. Let's see if they can push this. What if bulls show up here? Well, look, this bar 13 is a pullback and a second leg in a way, okay? So it pulled back up here. Now it's trying to come down. I like this bar to, close here, but if they don't close it, you kind of have like a second leg down already. And it's because this bar is so big, there are buyers waiting down here. I like to see it come down a little bit more. Can the bulls actually reverse this and go back and test the further up? Sure, they could. Because what they see here, okay, is a wedge. Okay, they already see a wedge here on the 2-minute and test of the EMA. So 1, pullback, 2, pullback, and 3. So bar 31 is not only a pullback bar, it's also the leg, and that's what I was trying to explain to you on the 5-minute chart. So they see, okay, this is a wedge, so let's bounce. Okay, so they're seeing a bull flag, and they want to go back and test maybe there, that area, or the high of that bar. But I do need to see on the 5 minute, that's a different story. I like to see bears come down and test this area. So I'm going to wait to see how this bar is going to close. I still want to see bears test that big bull bar's low point, because bulls kind of messed it up here. They should not have allowed 3 bear bars. Okay, so you see how that bar 13 went above the bar 12? That to me right there is a leg down. And I'm actually short, and I'm going to take profit somewhere around right here, a little bit below the low of 9. Low of 9 is 83.25. I think we will test 81 or, yeah, I would say 81 or 81.50 maybe. Let's see if they can do it. We just failed to test the low of 9 with 83.75. Just one tick. Okay. But we did come down there, so I was right. I guess I could say I was right. But one tick failure, that's odd. I kind of ended up taking profit early. I didn't like that. So I am out, but I'm still expecting bears to bring this down a little bit more. I still want them to come down and test 81. But we'll see. If this bar closes on its high, I am done with bears. Because we could go quickly up and test the bar 9 open area, okay, or the midpoint before selling again. We now have some kind of a trading range here. The only reason why I think that the bears could try this again, because we have 4 bear bars, tight bear channel. So they might try to sell again. But market is bullish, and buyers are always at the low of some sort of, strong bull bar, which they were. It's a bummer. If that body were to come down right here, we would have already down at the 81. It kind of upset me that bar 13 closed like that, so I hit close and got out. I didn't like that. So remember how I say, like, certain closes, it needs to come to a certain level, and it should not be given in with one tick failures like that. And then you end up getting this bar 14. But I did warn you that this is a wedge, okay? And you can either go to a 3-minute chart or 2-minute chart to see it clearly, okay? If you have a hard time, but not the 1 minute. If things are not clear to me and I'm not able to count the legs, I will come down on the time frame. Now, we do have a leg down, and we do have some kind of expanding triangle. Now, another reason why I think that we might end up coming down and testing, even though we failed here, this could become some kind of a bear flag and head and shoulders. Bears want to break this, and then they want to start, printing gap bars underneath the EMA and take out this low, okay, which is like a trading range low. So what bears see here, I'm on the 2-minute chart, okay, what they see here, possible head and shoulders, okay, and possible, okay, at or above the EMA bear flag, And what they want is a one big bear bar coming down and testing this and start to print gap bars underneath the EMA. Bulls want to go break above this trend line and break out and go test the high again. But even on the 2-minute chart, you have a strong, tight bear channel. So it's going to be difficult for bulls to do that. And that's why, you know, I'm still thinking of bears coming down to the 81 area, maybe even a tad little down before bouncing higher. Even though I chickened out and I got out of my short, but I still made money there. All right, so earlier I talked about this being bar 9 being a breakout bar, which was a good thing, right? And I said, when you have a limit order market and you're breaking out, yes, the context is good for the bulls, but I said be careful, because a breakout needs a pullback and a continuation, or breakout needs a weak pullback and right away a good bull continuation. And you know, if they don't get it, that means it's probably failing to break out. So I said, look at bar 10. If that bar 10 closes bearish, there could be sellers underneath, because this is first pullback, first push, first pullback, second push. We're gonna sell at least a small 2 legs to make that second push before we buy for the third push wedge. Okay, so many bulls who bought disappointed might get out underneath, or they're going to buy underneath here and they're going to get out right above because they bought above. Now, I want you to pay attention to something here. You see a bar like this, right? You got a bear bar comes after it, bar 10. But look at the positioning of bear bar. Look where the body opened. It actually opened higher than the prior bull bar's close. So there were buyers, market order bulls buying, okay? Stop order bulls bought 1 tick above. It went above that, and then they just got trapped there. So what are they going to do? They're upset. They're disappointed. They need to buy again. So they're probably going to buy underneath there or at the breakout, but they're going to buy. So what they want is they want to go back to 1 tick above that high at least and make their money back before exiting out. So they need to break even. They already broke even somewhere here in the middle, okay, or here. But their original contract ended up making money with that wick going up like that, okay? But then this bar 11 ends up closing bearish. If you haven't gone out, you better get out, because this is going to come down with a 2 legs. So that's when I start to tell you, we're coming down to test that low. That's what the bears want. But what bears want, they actually want to test all the way down, maybe a breakdown and bring down a little bit further, but not be able to breach that. So we didn't come down that much. I was disappointed, but I made money there, okay? So basically I sold there, I sold the close there, and I made money. So if you're selling underneath, if you're bear and you see that the bulls are breaking even with bar 11, okay, hence the upper wick, okay, and you sold 1 tick below that, you're going to have to put your stop up here. You're looking for 1-to-1, okay? So let me do this. So you sold here and you put your stop there, right? So market goes down, say 1 point, 91.50, 90.50, right? So 90.50 is right there. You just made a 1 point scalp right there, right? And this is still coming down, right? And they might have sold underneath bar 12. It ended up going up, okay? It ended up even going further up at the open and then started to come down. So if you actually put your stop here, you get kicked out. But if you're stop here, you're still bearish. You're still selling, okay? So you're hoping that the price is going to come down further. Now, it did come down quite a lot to the target. You know, there were buyers here. Those buyers are probably there. I explained if there is a bull breakout bar that's strong and they started to heavily buy here, they're probably buyers there, even though you don't have 2 consecutive bull bars. But limit order buyers are there. I said if you're selling, take profit. So you made money, but if you sold here, your stop goes here, you did not make 1-to-1. You see, I said around 81, 80, we would come down. You're not making 1-to-1, and that's not good. If the bears are not able to make a 1-to-1, it's because bulls are probably trying to go back up again. So there's that problem. So what would you do? Well, if you're still in your short, you're now watching after a strong bear leg like that, the first pullback is probably minor, right? So your stop is still here. You want to see bears breach that low. So that then, if they do close a bear bar here, then you can take that stop and put it down here. But if you get another bull bar closing above your entry price, maybe you should think of exiting out because you're not going to make money there, because it has a potential of going back to the 50%, maybe up to here. So now, do you see a second bull bar after 14? No, right? Would you still stay in your short wanting to get this 1-to-1 at least? Yes. Your stop is here. Now what you can do, if you're so scared, you can move the stop here, but still it can go up and get you out. Do you want that? Probably not. So wait for this bar to close. If this bar becomes a second bear bar, that's a continuation. That means bears are probably trying to come down here and close there. So no need to move your stop here. Just wait. Wait how this bar closes. If it closes bullish and it gets above here, yeah, you're going to lose a little bit, but at least you won't let that bar to go all the way up to your stop. You can exit out there if that's what you want. Because that means if this bar ends up being a bull bar, that means this could be high 1 and the bulls are trying to get a high 2 and the bears fail to get a second bear bar and not able to sell. So maybe the market sentiment on the short term, it's shifting for the bulls. And maybe it's time for you to hit close and get out. So if stop goes up here, because you're trying to make a 1-to-1 right there. Or you could say, well, I'm going to look to see who's failing here, okay? How would you do it? And that's what I was trying to explain last couple of days over the weekend to one member who really is not a member. But when you have double top, say this is a double top, and the bears are selling and the bulls actually ended up exiting out. So if you actually measure from underneath 5, okay, so they already made 5 points and then they're able to close bear bars and go down. So obviously they're going to go to the 10 point. 10 point is right there. They made money. They even breached it further. Okay, but they could not get to the 15 point. Now, bears want to come down to the 15 point, and that was also another reason why I thought that the price could move down here before going back up. But after 5 points, you always want to take profit at 10 point, okay, no matter what. Pay yourself because it's going to bounce, and it did. So now we don't have consecutive bull bars, so we don't really have a bull trend. This is still a minor pullback. Bears are still trying to sell, and they're still trying to swing this down to the 15 point, okay? And around that 15 point, I also measured if I sold here and my stop is there, my 1-to-1 is right around there, okay? So whether you're counting points, okay, to see who's scalping along the way, or your solid 1-to-1 risk reward, it's kind of in the same area. And if this bar actually ends up closing bearish on its low, we have a chance that price could still come down here. So then, especially taking out this low, then you can take that stop, either put it above 14 or your break even, so then you're risk free. You see how it's coming down? Does it make sense? It's a lot of reading, but it's just that's how I see who's winning, who's failing. Okay, or where I should keep my stop. Because say I sold here, okay, and I took a point or two. ATR is big, so I'm not going to go for a 1 point. I'm going to go a lot more than that. So I'm probably going to go half the ATR. So if I actually sold there, half the ATR at that time, say it was, what was it, like 6. So I'm going for maybe like a, you know what, let me measure it. Let's not be lazy here. So I sold there, that's ATR. It's 9, it's almost 10. So it's telling me I can make 5 points. There it is. I made 5 points there, half the ATR, and I left the runner. My runner didn't run. And I took my stop, immediately put it right here, break even +1, 1 tick under. As soon as I scalp that 5 point, it goes right up and kicks me out of my runner. My runner did not make any money whatsoever. So I'm done. But then I see a strong bear leg and a minor pullback. Limit order sellers are selling because we have a trading range here. So that tells me, okay, bears were able to make a 5 point. And if I measure here, that's 10 point. They might be coming down to make that 15 point scalp, possibly 20 point. So there's, oh, okay then, I was right. Check that out. I mean, that just slumped right down there. Now, why did that happen? Because they know that's a 15 point scalp and they're coming to get it. That's it. 1-to-1 is right. Oh, that is nice. So where's the 20 point? 20 point is right there. I bet L is scalping this. And now L is going to take profit right there at the 20 point, most likely, maybe a little bit above. But look, 1-to-1 risk reward traders stop up here. They got what they came here for, 1-to-1. So now point scalpers, the machines are going for 20 point. 20 point is right there. So that was really good, actually, exercise. I couldn't trade it because I'm talking. I missed this now. It's all your fault, Tunjum. Oh, okay, thank you very much. Market is, but look, as soon as they actually breach the 20 point, it immediately bounces because machines know they need to take profit. 20 point is a significant amount of move because it's considered a swing. I tried to explain this over the weekend. I mean, I really did. But sometimes people are so hung up on, you know, things that they, I mean, you know, you can't blame because they're trying to learn and they're trying to learn the right way. I'm trying to make it, you know, as easy as possible. I can't force it on anyone, but I'm trying to teach you guys what the machines are doing, what the risk reward traders are doing, and what the actually bars are doing. So when you combine all that together, you know, you're going to do great. So I want to take a look at oil. Oil is doing exactly what I thought that they would do. They broke the neckline, and it was also double top neckline, bear flag. So now they tested it. They're trying to break from that and get continuation. The problem is that this area is support. So if they do sell it, they could end up coming down here, but I think they're going to bounce there. Okay, so watch that area. So oil slowly is doing what I thought they would do. Watch that area. So oil slowly is doing what I thought they would do. It was fast. It's because machines know that they're so close to the 20 point. It's a big ticket item. They're going to want to get that. So they just dumped it. Anyway, so that was that. So my bull target met, and we could not close above it with 2 consecutive bull bars. So the bull breakout failed, and the bear started to print more than 3 bear bars. That's actually a tight bear channel. Any kind of pullback against it, you could say, well, I'm going to measure and I'm going to try to see if I can actually sell the 50% of that. And just like the bulls actually bought the 50% of this bull channel. So the bears did the same thing, and then they got a limit order sell, single bull bar. They're going to sell that, okay? So then you start to measure those points to see how far they can actually sell it. or use your measured move. 1 to 1 is always a target. Can you get 2 to 1? If you sold here, sure. But first I look at 1.5 just to see where they're going to close that body. If they, you see they're right at the 1.5, right? If they actually close a bear body below 74.75, then 2 to 1 is doable. But they need to close that body below 74.75. Then 69.25 is 2 to 1 target for bears. Good. I'm glad you guys are making money. I should say points, not money. You know, money is not our goal. Points, that's what we do, right? So it's kind of tacky also to say, hey, I'm making money. I'm making a lot of money. Oh, how tacky that is. So you want to make that, you know, 5, 10, 15. Once you make that 20 points, you know, that's when market starts to bounce because it's a big move. It's half a, you know, hard trend is a 40-point long, and half of that is 20-point trend move. They can still sell this if that's what they want, but we're at the EMA, okay? And what's happening here? Let's take a look. Two legs down to the EMA. Now there's a bit of a gap open at the EMA, okay? So it's not 20-bar gap. So what bears want, they do see a head and shoulders pattern. What they want is they want to keep selling this, but how can they sell this? Well, they can actually do a bear channel, okay, and a bear flag, and then suddenly they start to close bear bars. We could come down and test right here, and we could even go beyond that and get a measured move. Now, is there a measured move here? A bit of a measured move here, but we already met that. How about this? Now, that could be the target. So there's a potential, okay, a bear lag here. Now, bulls want to keep that one tick, you know, failure to test the EMA and the gap to EMA open so they can actually move up. Now, look left. You see 2 bars, right? So right around underneath bar 2 is a limit order buy zone. So the reason why we're also stalling, not because it's the EMA test, it's because limit order buyers are there. Okay, so, and their stops are here. These buyers are trying to defend this area because as soon as that bear gap bar closes below EMA, that's bad. That's bad for the bulls. And they're trying to come down to the 36, 67, 50 area or 67 area, the bears. And you got a measured move target there, 65.50. And that's that attempt. They're trying to close below the EMA. Now, what can happen here? How can they fail? How can the bears can fail? Well, they can come down and close a bar here and then test the EMA again. If they do cling to that EMA and not able to break down, we could finally get that bull bar, another bull bar, another bull bar, and we could still continue to go up. So I'm watching to see what the bears are going to do here. All I know is that I know they see that 36, 65, 50 as a measured move target, and they kind of want that. But you know, we're bouncing here. We now close that bull gap altogether, okay? And so they're always default, you know, machines sitting at the EMA buying the EMA. So that's that bounce, but the bar hasn't closed. On the last second, in 1 minute and 45 seconds, bears can close this body all the way below the EMA. And they're kind of buying here because if you measure from there, I'm going to measure from here, that's 27. Now, why wouldn't I measure from there? Well, I want to see how much the bulls actually move the market. They moved about 10 points, so I cannot measure from there. So I'm going to measure from where they start to sell. That's got to be a 20-point. Yep. So the reason why we're bouncing here, bears actually moved the market from there to there 20 points. That's another reason. So I'm counting points. That's how I make my living, because that's what machines do. So patterns are one thing, eyeballing is another, measured move is another. Once I see, one side made about 10 points, that's kind of a strong, so instead of counting from here, I count from there, okay? But if you do count from here where they start to sell, you can measure 40 points. So the bears can actually continue to push this all the way down to the low of bar 1 before bouncing. So there's a potential area right here we could come down and test. But we are at the EMA at the moment, 2 legs down. But, all right, so bounce at the EMA, no closing below, but look at that bar 17. Now we have 18 bar range. Bears still want to break out to the downside. So if this is too low to sell for them, okay, they might be wanting to sell the pullbacks. So I don't know if the bulls are actually here. Yes, the limit order bulls were there. Bears knew the limit order bulls were there at the EMA, and bears also know the EMA bulls are sitting there, so they took profit. That's fine. But if they don't see strong buy pressure here, this could be a good, sell opportunity with a pullback. And again, I'm still not eliminating that bear flag opportunity to sell once again. So bulls want to get some kind of a small pullback bull trend and go back up by just grinding and grinding and grinding and test the highs and make new highs. So I am not giving up on bears, because look at that body, bar 17. And look how the body closed. That's still very strong, and somewhere around 50% of that bar 17 sellers might be there. So if the bulls actually close a second bar 19 bullish, okay, they're going to have to show me the third bull bar. And then if they do get the third bull bar 20 bullish close, then I would say, okay, so they have some kind of a momentum here and they're trying to buy. But I don't see that. I'm not interested in buying against that bar 17, 16. I don't want to do that. So I think the bears are going to try to sell this one more time. It's just a pullback. In order to go long, again, I want to see bull closes, and then I'd say, okay, I might be interested in buying the pullbacks. If the pullbacks are only one single bear bar, then we're in some kind of a small pullback bull trend. So bar 17 presents, problem for bulls. We're kind of testing the 50%. Also, let me get all of this. You can have your measured move targets and all that, but what do you guys see here? That's a double bottom at EMA, okay? So if you actually now look at a bigger picture, now what do you see? So if I want to be bullish, could this be a double bottom EMA bull flag, or could we just come down one more time and make 1, 2, 3 push bull flag and then go up? Or is this already a wedge bull flag? Leg 1, pull back leg 2. I don't have a leg 3 yet. So I don't know if I want to buy this just yet. Could this be a double bottom and go long? Fine, that's fine, I'll buy it. But they still have to close this bar bullish, open the third bar bullish, and close it bullish. then I will buy the pullback. I will buy every pullback. But I'm not that excited because this can come down one more leg. I'm not that excited because this can come down one more leg. Okay, Ray, I'll just do that. I'm going to move on. Thank you for the pep talk. I kind of did move on. It's great. I love the camaraderie here. It's just everybody's like, just move on. Look for another trade. Okay. So I'm glad I didn't buy it because it's possible that the bears are trying to put a bear flag here. But my eye is on that bar 20. If bulls actually do close a bull bar, you know, I'm not going to eliminate the fact that they are trying to, you know, go up to the prior highs. But that bar 19, I mean, bar 18 is a nice bar. Let's say if you're counting from these highs, that's your high one. And that's your high two. So the bulls they bought one tick above it. Their stop might be here. Okay, so they want to continue up, but you're going against a bear channel. I still don't want to buy it. So I would be interested if they can close this bar bullish. Then say they couldn't close a bullish, they close a bearish, we come down and we make a double bottom. Limit order buyers are probably underneath bar 19, so they're going to have an attempt to buy with limit order that pullback, okay? And some bears selling the close of bar 17, or look at bar 18, just like bar 10 went above and then the bulls got disappointed. Bar 18 went below that bar. Now the bears got disappointed. So they're going to have to sell somewhere to break even. We could just dip a little bit, but not entirely come down here and then break even as best as possible and then just still move up. But that means when that kind of move happens, when the bears are trying to break even because they're selling the wick of that bar, or if they're selling there and this comes down, it looks like it's coming down, it's trying to, you know, break even those bears somewhere in between here or there, comes down suddenly and goes up and closes bullish with a lower wick. That's when you hit the need to close, like lightning speed, because that's all you're going to be getting. So right now, the reason why they're selling here, because these bears are disappointed and they're trying to break even. They already must have broke even. Now, and what bulls see here, okay, 2 legs down and possible 3-bar combo above the EMA, okay? They're trying to prevent a bear bar close below the EMA, and they know it's 2 bars. There might be limit order buyers underneath. So in order for me to buy this, okay, I would want to see bar to come down here, then close up, close like this maybe, a bull bar, okay, like that. Then I would hit buy. But until then, not interested in buying. Because those bears stuck with the close and 1 tick underneath 17 are still trying to make money with their original contract that they sold 1 tick below 17. So, and this is also presenting me a bear flag here. Like I said, that it could happen. I'm not making this up as this goes along. I just have seen this day so many times just play out this way. I'm just trying to show you guys some, you know, blueprint bars that you can pay attention. When this happens again, you're going to remember. Okay, so the bears are trying to print a bear bar and become always in long. Always in short. There's nothing always in short there. And bulls are trying to get a wedge, double bottom at the EMA, and a bull flag. Remember I said I do see 1 push pullback, 2 push pullback, but I don't see the 3rd push. Now you're getting your third push. So watch out, because there's also 1, 2, 3 possible overshoot push before we go up again. Unless we get a ginormous gap bar below the EMA, then they can sell. Okay, so what happened there? You should immediately recognize what just failed to happen. Bears failed to close a bear bar. They closed the body right at the EMA, bar 20. So, and that's a failure for them, because that's a fail to break below the EMA. And the bulls see that as possible double bottom, possible wedge. So they're like, okay, this looks really nice. Okay, so the bears came here to break even, and they might have already made money with their original price. If they can be satisfied and get out of the way, we can then, maybe print a big bar and buy. But I'm going to wait for that. I'm just waiting for everything to set up the way I want it so I can buy if I want to buy. So that seeing bar 20 body not closing below 1 tick below 20 gives me some kind of, okay, this looks good, but here's my problem. See that? 73.50. If bulls fail to close this body up here, okay, they can still come down and close a bear body below 73.25. That could create a bear pressure, and they could sell into the bar 1 low, and we could make a new low of day. Because what they're still trying to get here, bears are still trying to get a bear flag there. So, inside bar, you also have triangle. So we're going to get some kind of a triangle breakout. Triangles are bear flags if the pressure is bearish. And you have a trading range. You got a big up, you got a down. And it's almost like an equal distance, so you have a trading range. Even if we break down, probably we would come down and test, but there are probably buyers there. So I did not like the fact that we only get 18 and 20 bull bars. And if that was a high 2, that was a terrible, but they still made money. Now, will the bears and bulls are going to actually get high 3 here at the EMA? They're going to have to close that bar 21 on its high. I don't see an IOI, but I do see a triangle, so we're probably going to come down. So that tells me we're going to overshoot, and we're going to make a 1 pullback, 2 pullback, and we're going to come down here. So you see why I did not want to buy? I think we're going to end up coming down to 36.67.25, a little bit further down, and tests of 36.65. All right, let's see if they can. We might even actually sell all the way down to 36.60 or 15. 36.60 is also doable. And these bears want a 40-point big ticket item. That's their trend move. They want that 40 point. So I'm watching to see if this bar actually ends up closing with a bear bar 73.25. They're going to keep selling this. 25, they're going to keep selling this. All right, let's see if we can test 67.25 or 67 area, maybe even 65. So I am short with 2 micros. Let's see if we can just sell this a little bit more. But be careful, bulls want to reverse this. They could reverse right here at like 72, 71, 50 area. Be careful. I'm going to take profit here. I'm going to scalp. I want to see 71, 36.71 is where I want it to be tested. Okay, so they're testing. They filled one of my contracts. They left one behind. I'm just gonna close it. So, okay, so I scalped here, but they're gonna probably try to continue into what I called 67.25 to around 65.50 or 65 area. This can still continue to sell, but I took profit here. Now, if they do close this bar bearish, they're going to continue. There it is. They're coming down 67.25 to 65.50 maybe. I would want, you know, just take profit there, please, because it could bounce. It's going to bounce. You see how they're testing that line? That 40 point, if you want to leave a runner, take profit here and I'll leave a runner into the 40 point, be my guest. However, 40 point could be also down here because bulls kind of pushed it higher, but I think that just defeats the purpose. So I'm just going to leave it right there. So that's where market is trying to reach, which happens to be the open of the day. So I think bears are going to push this a little bit further. I said 67.25. Sorry, they ended up testing 68. So 3 ticks short of my target, but it's not the end of the world because there's still 2 minutes and 45 seconds. They're going to meet that target. Let's see if they can push this further down. But if you're scared that the wedge line is tested and you want to get out, or you already have gotten out like the way I did, sure, that's what that line is there for. I drew it for you so you know that we were going to test it and you could have taken profit. Bar hasn't closed yet. If they do close this bar on its mid-level, minimum mid, okay, preferably lower than its mid-level, it will continue to come down to 67.25, furthermore down to 65.50 or 65. You better take profit at 65. Do not linger. It will bounce. They're trying to overshoot it because you would expect an overshoot with a wedge. Remember how wedges work? Either the third one is an overshoot or second one is an overshoot, okay? One of the other. I'm not making this up. This is how I learned from L. Brooks because he has shown this many times in his trade room. And then the third one is an undershoot. 2 is undershoot, or you get the 3 undershoot that is called truncated wedge. You don't get those often, the truncated ones. So I'm still waiting for these bears to get a grip and just sell this thing. 67.25. Minimum. And I like to see 65.50 to 65 actually get tested. Okay. So now I'm expecting a little bit more down. Let's see. So it could actually sell another 5 points maybe. So it could come down to 36, 66. I don't know about 35 anymore. But let's see if they can actually make this. What if they just reversed here? Well, bar 22 kind of closed beyond the EMA. Now they're clinging to the EMA. That's a problem for bears. Okay, they need bars that are separating from the EMA. So I'm going to get rid of this for a minute so you can see it. Okay, and we need this to separate. We need that body to actually close down here. because clinging to EMA under the EMA, bulls can show up eventually, and this breakout could fail. But I think we're going to keep pushing down, at least to, let's see, there's a breakout point. Look what's happening. There's a breakout point, and they're testing that, and they're kind of selling right there. So if ATR is 667, that's 6.5 points. So if you take out 6.5 points from here, so I'm going to take out about 6 points, we could come down and test 66.75. All right, so let's see if they can push just a little bit further down. But what do you notice here? Look at the bar 17, no bear follow through. Look at the bar 20, no bear follow through, alternating bars. Look at the bar 22 and bar 23. Where is the bear follow through bar? You should get, if this is such a strong bear trend, you should be getting 2 bars back-to-back consecutive bars, and you're not getting it. So this could be a final, okay, scalp into 66.75, 66.50, at best, maybe 65, and then reverse up. So I'm going to be patient here, see if the bears can actually, one more time, sell this. What if they fail? Well, if that bar closes like that, that's done. You may want to then get out, because that should not have happened. That should not have happened. So this is where you decide whether or not it's exceeding your, okay, risk. Say you sold here because you see a breakdown below EMA and you're expecting a little bit further. What happens here now? If that body closes like that and it comes to the 6 point, and if you're in with one contract, that's $300 loss. Can you take $300, or can you hit close right now and get out? So you're going to have to ask yourself. And I said that these bars are clinging to the EMA, and the bulls are trying to reverse this. So you're going to get these failures. And I kind of explained why it's failing, right? So it's, look at that, alternating bars. Bears are not showing 2 consecutive bars closing back to back, and that's a problem. So disappointed bears, so I'm done with this. I actually, if I were to sell it, I would have actually taken a loss and be done. And can they still come down to the 40 point? Sure, they can still do that. Because this is so low, okay, at the low of a trading range, buyers are there, so maybe bears want to sell this with a pullback, a strong pullback. But that bar is too big now. And we've got a wedge here, okay? So we have a wedge, so the buyers are now coming in. The only problem is that this, okay, is not an outside up bar. And we have a trading range. So most likely buying that bar, okay, buying bar 23 into the smaller trading range highs, you could get in trouble. Wait for the pullback and see if this bar closes bullish, then you buy and expect continuation, okay? But if there is a resistance here and you're buying into that, this bars or the next couple of bars can come down to the 50% of that bear bar, and then you could get stuck in that long. If they do close it, it's because they're trying to get to 83.25 area. But if you were short here and, you know, there's a double bottom at the EMA, bulls are trying to get a kind of a bull flag, wedge bull flag, and go higher, you needed to get out. Regardless, you needed to get out. Some hesitation here, but it's a big bull bar, and the hesitation is because of this highs. It's a overlapping bunch of bars that makes it a tight trading range. Anytime you're buying into that with a strong bull, machines always try to sell it first. And if they do close a bear bar, they could try to sell into the 50% too. Now, if they sold it, but if they cannot sell further, meaning this bar closes bullish, then they're going to buy in, at least to go up to around 83 area, maybe even further, I don't know. So it's stalling here, not finding buyers for that reason alone. We'll see a bull wedge flag, and breakout failed underneath the EMA. Nested wedges, big up, big down trading range, kind of testing the low of the trading range. So bulls were expected. Say you don't know anything about the wedges, nothing. Just look at the way that the bears bar failing to print. Okay, consecutive bars, so it's a sign of bulls coming. They're trying to test 83.50, 83.75. The low of this bar, 13 or 14. They're trying to get to the bar 14 low. Possibly, so. All right, so they tested that area. So many bolt this now, and if it closes bullish, they're going to try to buy because this is where they're trying to test. But I would expect a little bit of pullback here. So bears completely lost their grip there. Bulls want to get back up to these highs. I am done with this. If they're going to sell this, now is the time. If this is high enough for them to sell, maybe you would measure from there to there. And we're above the 50%, somewhere in the middle. We might still go up to here and then come down a tad little bit. So what they want is, bulls want to go test the midpoint of bar 14 and eventually go up to here. So bulls need a second bull bar above the 50% of this range to continue go up and maybe even further more up. So we're back to always in long, two bull bars. One of them is completely above the EMA. There's a big chance that bulls are going to buy the pullbacks, okay? So the pullback could be 2 to 50% or down here maybe, or they're going to try to come back down to the EMA. But it's very strong at this point, always in long. Bar 24 is a breakout from this small range, okay? So bar 25 is a pullback, but I don't know if that pullback is done yet. So it might come back a little bit more. If they do close it on its mid-level, it might still come down a little bit, but bulls are trying to buy and go test the highs. I like to see a little bit more pull down, but where bulls are trying to go is basically either 88.75 or 89.75. So another reason why we're stalling here is that bar 14, right? So bulls kind of accomplish something. They just want to go and test that area now and then test that high. So they want to completely eliminate this bad signal bar. Because it's the first breakout and overlapping bars quite a lot, so I like to see the pullback a little bit more. I don't know if they can make it, so I'm going to wait to see how they're going to close this bar. Okay, so they are going up to that target, 88.50 or 89. I'm sorry, 88.79 or 89.79. And why is that? Why would they go test that other than being 66 1/3 of this entire trading range. Well, if you measure from here to there, that's a 19 point. It's almost a 20 point run. Yep, it's a 20 point. So they would maybe take profit here. 3 bull bars, buy to close, but they're at the 20 point zone. So I like to see a little bit of pullback. And that pullback is basically ends up being a take profit. So this is a profit taken now. So bar 26 is a profit take bar. Now, if they do sell and close this bar on its low, there could be some sellers, okay, wanting to get maybe a 2-legged counter move to the EMA, and the buyers could still show up. So I would like to see pullback here a little bit more, maybe test of bar 25 low. But this is always in long. Bulls are still buying. They're going to buy any pullback to get back up to here. We now have a bigger triangle forming. I'm going to get rid of this. There's a trend line. Can we come down here? Sure. I don't know if that's the top of the triangle at this point, but you know, I'll adjust it as this goes because this bar hasn't closed yet, so it's difficult to put that up there right now. They're probably buyers at the low or the mid wick of bar 25. And yeah, so they're still taking profit at the 20 point. Now, in order for this to keep going up, bulls need to close a body above bar 25 high to keep pushing towards the high of bar 11. So we need to pull back a little bit, just a little bit at least. So I would assume we might end up coming down to maybe here, somewhere here to there. Buyers are probably waiting. At minimum, we might pull back there, so we'll see. If bears cannot close this bar bearish, then we may not pull that much. Or bearish, then we may not pull that much. So I will treat this as a 20 point take profit here with this bar. Can it come all the way down here to the breakout point? Sure. Around here is basically support, what I marked earlier. So somewhere around 81, 81.25 area. Let's see if they can pull. But what if the bar closes on its high? Then they can't. So I can't really, you know, judge it until the end. So there's still 1 minute and 20 seconds. Because bulls want to test that bar 14 high. That's the goal. They're already testing the midpoint of 14. Okay? Right there. They tested it with bar 25. Happens to be a 20 point. But they want to get 1 tick above the 14. But I think we need to pull back first. 1 hour is still trying to reach up here. We have 3 hourly bars overlapping. I think the bulls want to test the last hour's high. They want to get up here. So what's happening to my pullback? Well, I guess they're not ready to pull back. Bulls are trying to break out and get back up here to 93.75, 94. Good for them. They got a really nice momentum here. So I guess these weeks were just the only pullbacks that they got. So at this point, I would expect 94 to be tested. So bears totally failed here. The profit taking just ended up being just a momentary profit taken, and then there were no bears to sell. Now, can they still sell? At this point, selling may not be ideal, just profit taking. It could come down maybe a couple of points, but that's it. Well, yeah, I mean, it's a 20 point, and I did say that they needed to close a bull bar above 25 high. They literally closed one, I don't know if it's a 1 point, so they kept going higher. So conditions kind of met for bulls to go longer. Bears failed there. They're trying to get to 94, 95, eventually to 36.99. Watch out, bar 14 high, major objective. All right, so did we test just above 14? We did. In fact, they went slightly more than one tick. So 94.75. Yes, so they went for 1 point and a tick extra, but they have accomplished a major objective there. So they're taking profit. Now, can this still come down? It's very strongly bullish, but now you need to take profit. So now it can actually end up coming down. I don't know, if bears are lucky, maybe to 36.85, and it might still find support there to go and test the 36.99 again. Now I could say I can now draw my triangle upper trend line. So where is the apex of it? Somewhere around here-ish. Can we pull back in there? Possible. They can, but they need to print a bear bar here. It's difficult to sell against this bull leg in a trading range also, but it could be just a bull leg in a trading range. So I'm basing this as my apex because several things happened there. We came in there, used that as a support, broke out, came back in, broke it, turned it into a resistance, went back, tested, sold again with second leg. Now we broke above it, we could come back and use it as support again. Or we're going to break it and we're going to come all the way down here. So, or we're just not going to do anything. We're going to keep going up and up and up. It's spike pullback channel. So think of this as a spike pullback channel. So somewhere here, without testing this, we could still test this area. Or if you're still bullish, bulls want to go to 36.99. And actual sellers might be there. It's not a good sell signal, bar 27, but some bulls might start to take profit 1 point under if this bar 28 closes bearish. So I would expect a little bit more pullback here. I know you don't like to hear it. All depends on how this bar closes, right? So it's nice that there are 5 bull bars, and bulls probably going to buy the pullback bars. Bulls actually want to go and test the my earlier targets, 3710, 3712 area, maybe even 14. So they still want to continue to go up there. But I'm going to wait a little bit, see what the bears are going to do here. So there might be some bulls getting nervous about this bar, possibly, and they might start to take profit maybe 1 point under that bull bar if this bar closes bearish. If it doesn't, then you don't need to worry about anything. But be prepared. If they suddenly close this bar in 1 minute and 45 seconds bearish, it could pull back down to 36.81. I'm watching 85.75 to 84.75, just 85 area. If there will be a pullback, that's where bears could try to pull back. So don't just panic yet. But if they do close this bar, you could find yourself right around 85 area. If they can't, then 36.99 is target. Nice momentum, it's still moving. Let's see. 3,700 is also target. High of yesterday is target. This could be a leg in a trading range. Or we're going to get a nice breakout to the 37.12 or 37.14. All right, so we're just about at 99.75. I'm sorry, 98.75. I meant to say around the 36.99. Could push 2 more points, see if it can. 36.99, 3,700 target before pulling back. So clinging bars, going back up to the top of the trading range, could come down before having a bull trend, small pullback bull trend, or we're just going to come down a little bit and then break out. We have a magnet. So I did say that we're probably going to test the last hour's high on the hourly chart, 60-minute chart. So we are testing last hour's high. We do have a trend line up there. Now, limit order buyers here, we have a breakout bar 29. Limit order buyers want to buy a pullback maybe here because you've got a really nice bull leg, but is this a bull leg in a trading range? That's the problem, because if it's a bull leg in a trading range, it could come down. So some limit order buyers will buy here and they're going to try to go for a 5 or 6 points higher. Or if we end up getting some kind of a 2-bar reversal, like I said, we could sell. There's a wedge here, up, down, up, down, up. So can we come down and test around bar 28 low? Yes. That's the last push where last push began. Okay. But if you're trying to sell, you're either thinking this is a trading range and this is a leg in a trading range, so it could come down, or you're selling because you see a wedge. Okay. You're expecting a pullback. But look how many bull bars. It's very difficult to sell against. So bull's probably going to want to buy any bear closes because they will be upset with bar 29 not following through, failed breakout. So they're going to try to buy down here to break even if they have both that close. Stop order bulls did not get activated, so they're safe. They're watching to see how strong of a bear bar this is, because if it closes really down there, okay, right around the open of 29, that could become a 2-bar reversal. Let's see how this bar is going to close last second. There's still time. It's an inside bar. It's at the highs. So when you get a wedge and an inside bar like that, there could be sellers right underneath if that bar 30 closes very strong bearish. So be careful there. It is as is. It's an inside bar. So bears will want to come down and test 88, 36.88, or the low of bar 27. And eventually they could actually push this all the way down to 36.85, like originally they were supposed to. So can we come all the way down to 26, bar 26 low, or to the apex? Sure, they're going to have to show us a surprise bear bar. So if we get a surprise bear bar, that means we're selling at the high of a trading range. So that bar needs to close suddenly down here, okay? Bear bar. That would get a little bit more move down. Okay, so they did close that bar 30 bearish, but it's the signal bar, only single bar. Now, not many bears will try to sell that, okay? But it is an inside bar. It's a strong bar. So many bulls might consider getting out a couple of points below bar 30, but if they do not see bar 31 close bearish, they will not get out. But if that bar bar 30 is not a surprise bar, but it did close below the open of bar 29. So that makes it a 2-bar reversal. So it should at least try to move 5 points. Makes it a 2-bar reversal. So it should at least try to move 5 points. Unless this bar closes bullish, then you have a outside, inside, inside. So we have a breakout mode here. We'll still want to get to 36.99. Some bulls immediately vote the bar 30 because they're disappointed with bar 29. So they're trying to either break even here or they want to keep going up to the 99. But strong inside bear bar. I think they're breaking even and taking profit, so we could end up coming down. Test of 28, low of 28 is doable. And we might even just move, let's say, we might test 88.75 to 87.75. And that's the first bear target. Bears can move this further more down. So they might be trying to get a 5-point underneath bar 30. So the first targets, like I said, as early as 88.75, 87.75, and furthermore 5-point to even 10-point all the way down here. Yes, we do see that, Ray. And this is just a pullback because there's a wedge, and I counted those like so: 1, pull back, 2, pull back, and 3. So first 28 low, there are probably buyers there, and they're going to try to prevent bears from closing a second bear bar because they want to get up to the 36.99 and furthermore bar 11 high. But that bar 30 is strong, so it needs to get that 5-point at least. At least they could try. I don't know. All right, so 2 bars. Bears need a third bar to continue to go down. Both bars closed below their midpoints. One of them actually closed really strong. So I would assume these bears are going to want to test somewhere between 88.75 and 87.75 before bouncing slightly. And they might try to get a second leg down. Can they be trapped here and then it would just go right back up? Yeah, it's possible. We're very close to the bar 28 low. So what if we get stuck rest of the day in a trading range? Market is bullish. It's always in long. Bulls are going to buy the pullbacks. There's no surprise bear bar, so selling is not that strong. I am getting tired, guys, so I'm going to sign off. Now, let me check something. Today is 17. Okay, so nobody's scheduled in the afternoon, but I might be in both Discords, my own and then BTC Discord. So I will post on their ES analysis if I see good targets in the afternoon because I want to trade a little bit more. So bulls are getting high 1, or you could say high 1, high 2, high 3, and they're trying to get high 4, high 5, and they're now trying to break out. All right, so only 2-bar reversal. They couldn't even get down to 28, so they're buying. So this is still very bullish. 36.99 is target, and then furthermore up the high of 11. They want to break out from the high of bar 11 and then get to here. But I think there's still sellers might be here. We might be, anyway. All right, so I'm going to end my session. I'll see you guys later.